Hi, good evening, everyone, and how are you doing? It's evening on my end. A big shout out to Crypto Senko and the Senko community, big fans of the channel. So I decided to do a open mic thing for the community and for anyone who has access to my channel as well. So every Saturday or so on the Senko community, we discuss stocks, crypto, all around the clock. But Saturdays are for requests, and people can get to request at Senko does TA and FA when I'm free. I chip in as well. So I got a bunch of requests in the community, and I said, hey, let me do something different and let me look at all of them. Now, you notice that you have July 5 because that's when I started work on this document, and that was when we got the request in the community. Today is the 7th of July. So ignore the numbers, but all prices used are as of the 7th of July. Now, this table is a bit large, and I had about I think 20 or so odd stocks. So I've broken it into different pieces. Now let me run you through the the column on my left, which has EPS and all those things. EPS is profit per share. Every 3 months or every quarter, companies tend to release their quarterly results, and then you then have the profit per share. If you take the profit per share, you can then estimate that if the company's performance is constant, that's going to be total profit per share for the year. Now, I varied it depending on some of the stocks. May and Baker, for instance, is a company in the pharma space. Most recent um, profit per share 66 kobo. If it maintains that all through the year, you're going to get 2 naira 64 kobo. Price to earnings ratio is about 6.4 times earnings. Target price is 7x, meaning 7 times earnings per share. So if you work out the numbers, if you take that, and I hope you can see the B5 and B7, Excel makes it easy for you. So that's why I have my target price. Upside is 18, potential upside that is 9.35%. And so my view is it's a hold. If it comes down to say 15-20%, then yeah, it's more interesting. So it's a hold. Same thing for Sky Aviation. Sky has run up. Sky is in the aviation handling space. It's a duopoly alongside NACO. So I mean, NACO is doing pretty well. Expect that the rest of the launch or rest of the customer base is served by Sky Aviation. And Sky is not very liquid, so perhaps I should put it somewhere in my write up so people know. Because even though uh, there's a tendency, there's so much of a frenzy these days in markets, people are just putting money into literally everything. So Sky is rather illiquid. Do note that, and whatever you do, as always, please note this is not investment or trading advice. Do your own research. These are my views on the stocks, and my views are rather fluid. So Sky, it's I think at best maybe you have a 10.5% upside. It's not worth entering for my own self. It's also a very illiquid stock. I don't do illiquid stocks. LRLX, I put a hold view on it. Capital raise in the works. And for a lot of these stocks, if you come through my channel, some of them I've covered as well. The videos I've done probably would have slightly different valuations or maybe more comprehensive. So please refer to the videos on the individual stocks or other videos on these stocks or sectors in the channel. They will give you a much better insight. I've tried to keep this as simple and as concise as possible. So LRX is a hold. Hold means do not buy or sell, and it's quite clear. It's trading slightly above book value. Capital raise, potential capital raise in the works. There'll be a extraordinary general meeting of shareholders sometime this month for approval and all that. Okomu is the prices by book value of the three firms in the oil palm space. So Okomu, in my view, is a hold. I mean, some people might term it a sell, but I think with the momentum in the market, it's highly unlikely that you are going to have a strong downward movement anytime soon, except the Q2 numbers disappoint. Wema hold as well, in my view, is trading above book value, and broadly speaking, I'm waiting for H1 2025 numbers for the banks. The CBN circular that was floating a few weeks ago simply says, look, all your forbearance loans, or in essence, loans that were problematic and you've been having issues with them that we've allowed you to treat somewhat differently, you have to take these loans into account now. You have to take your single obligor limit, which is the maximum amount you can lend someone. There's a limit on that. So banks generally, I hold, in my view. CWG hold target price is 16.2. Now, if you push this to a target price of 10 times earnings, my estimate is about 2 naira 32 kobo. So 2.32 times 10 will give you 23. Then maybe your target price will be higher. And I can't remember the numbers I used in the previous video. That's why I gave my disclaimer. Previous videos have more details because there I spend more time on stocks and I've dwelt explaining my rationale. So this is just to make things as simple as possible. So again, CWG is a hold. When the H1 numbers come, H1, if you estimate, if it's slightly higher than estimates, then maybe I can revise if I have the time. Dangote Cement, definitely accumulate. Accumulate is a fairly new term I've used on this channel. I think this is the first video I'm doing that I'm using the accumulate view. Accumulate simply means that you buy gradually, right? Why do I say so? Stock is illiquid. Let me type it there as well. A few of these stocks are illiquid. And practically I love to know that, unfortunately, because there's a lot of content floating around, people just would act regardless of what you say. But I think it's part of education. I saw someone complaining a few days ago about Geregu Power and the difficulty in exiting it, and that's because it's an illiquid stock. So Dangote Cement, I have an accumulate. Accumulate simply means you buy gradually. Potential upside 17.65. Now for this, I used a 10x valuation. So if my full year EPS estimate or profit per share estimate is 15 naira, multiplied by 10, you get 500. You can check, I believe, the previous video I've done on the cement players will give some more insight into that. But to give you a concise reason why I'm using this, even though your first quarter EPS or earnings per share is 12.29, I believe that definitely is going to accelerate. So ideally, we very likely would end up with a 55 or 60 naira as full year earnings per share. So if you do a 60 times what? I mean, it's 60 times 8 or 60 times 10, your target price will be anywhere between 480 to 600. But I think this is a fair price. And let's see how Q2 numbers are. Guinea, straight sell for me, trading way above book value. Previous video I did, I explained the meaning of book value. You take the assets divided by liabilities, then the figure you get divided by the number of shares. Book value essentially means if I liquidate this stock, liquidate everything, what am I going to end up with per share? And that gives you your book value. So book value for Guinea is an insurance firm. By the way, 67 kobo. The stock is trading at what? 1 naira and 13 kobo. I mean, yeah, you can argue maybe this stock should trade higher than book value, but I mean, it's already trading at what? 1.6 times book value. I don't think this stock deserves a valuation higher than this at the moment. So let's go to the second set of stocks. Do I have a repeat of MTN? No. Okay, good. So for the second set of stocks, international breweries, I believe as well that you take the earnings per share, and if you analyze this, actually went up a bit higher, because if you're doing 0.3 times 4, you get 1.2. But the festive period, Q3 and Q4, are periods where you have a large demand in the sales of drinks. So you cannot estimate that. I mean, so even if, yes, you might argue where in the rainy season things might slow a bit, there is no way that their profit per share isn't going to push it 35, 40, or even 45 kobo. So if you work out the numbers, I think we can easily do 1 naira and 40 kobo. Yes, I'm using a target price of about 15.7. Current price is 15.35, and it's quite simple. This is one of the biggest, if not the biggest, brewer in the country, right? They are the biggest. Probably next to them would be Nigerian breweries. I mean, they kind of almost are neck to neck. So if you work out those numbers, I don't think that this stock should be trading less than 20 naira. That ideally would have been my view. So that's why I'm having it as a buy. Yes, and you can see my rationale. Revenue should accelerate for the rest of the year. ROTY meaning rest of the year. Same rationale I have for MTN Nigeria. First quarter EPS was 6 naira and 38 kobo. But remember that not quarter doesn't fully encapsulate the potential in the revenue, additional revenue they're going to get from hikes in tariffs. Now it's a chicken and egg thing, and management had alluded to this in the Q1 call. So yes, they have got approval to increase tariffs. They might see some softening, but recent data from the NCC shows that yes, softening happened and then there was a rebound. So in my view, and the numbers are quite simple, if you assume that MTN does 8 naira earnings per share for the remaining quarters of the year, that gives you 24 plus 6, that gives you about 30 naira. Now, if you use a valuation of about, say, 12, 13, or even if you push it at 10, that's 300. I think that that's a rather low valuation for a firm that typically before all the macro shocks that we've had was easily doing 20, 30% in bottom line and top line. So in my view, I think that if you're going to value this firm, um, ideally you could probably use a 10 times earnings. And if you use 10 times earnings, probably earnings end up at what, 32, 35. I guess you would arrive at this point. So I think 400 naira is a fair value for this stock. Let's see what H1 numbers tell you. We should get that sometime towards the end of the month. So anyway, I have it as accumulate because potential upside from where my target is about 11.89%. Accumulate simply means you build up a position slowly. ICO, I have that as a buy. Trading below book value 1 naira 98 kobo. Current price is I think about 1.65. So yeah, you have that potential upside. Fits in, I have as a hold. Why do I have it as a hold? Probably maybe a rights issue on the way, or to correct that. Since management was a bit open, I can change it to actually what it should be: equity raise. What's the spelling? Equity raise on the way. So that will mean dilution. And so it's a hold in my view. And fitting has run in the last couple of weeks. I don't see what will push this. Now, please refer to the video I did on fitting. I don't have the numbers offered, but I mean, if you play around with numbers, if you use a peg ratio, you might have maybe a slightly higher valuation. But this is my view. Transcore accumulates. I think there's room for upside. Simply, and for Transcore, I use a 7x earnings, right? So earnings per share, my estimate based on Q1 numbers is 7 naira 68 kobo. You multiply that by 7, you get 53 naira. Stock is trading at what, 47. I think there's room for upside. If you want to be conservative, you can put it as a hold till you see downside. But I mean, we're in a bull market. I think that this market probably could do another 5-6%, maybe. So you can work out your numbers, but those are my view on Transcorp. Ikeja Hotel, this is also another stock that I went above my estimate. Now, if you multiply this, you get what, 0.77 times that should give you maybe 0.28. Now, my estimate is, or my rationale is Q4 earnings per share will accelerate. Festive season, I think they have a market or event center, as we call it here, that should accelerate revenue at the moment. So this is my potential upside. I mean, I think at best, maybe you can put the stock at 20 naira so you can do your numbers. 20 minus 18 maybe gives you another about 10 plus some 10 odd percent fraction as potential upside. So that's how I view it as well. You can see I kind of copied everything, but I'm coming to the banks, right? So now for the banks, I have a bit of a disclaimer, and you can refer to my video on Zenith Bank where I gave different scenarios whereby stage one provisions, write it off what you get, two, three, write it off what you get, add up everything, write it off. So please refer to my Zenith Bank video on the channel for a better explanation. Now, for First Holdco parent company, First Bank, I mean, yes, book value of 76.9, stock is trading at 25.95, potential upside, maybe you might say 100%. Now, why did I use this? You might say, if the book value is 76 and current price is 25, then the upside should be bigger. That's true, but I'm also waiting for H1 numbers. So in actual fact, I probably should even make this a hold, depending on how you view things. Now, if you want to be conservative, you can say, look, I ain't buying anything. I want to see H1 2025 numbers. That makes sense. But if you do your numbers, and I don't mind, I think that the worst case scenario is maybe you put this stock a 1 year target price, and all the target prices I have are all 1 year in duration. Even if you say the stock should be trading at 40 naira, you can work out the upside. I mean, 40 minus 25, half of 25 is 12. So that's like a 50 something percent upside. So these are all my views. If you want to be conservative for First Holdco and Access, you can say hold. I ain't buying till I see the results. If you want to maybe be a bit less conservative, you can decide to accumulate and say, look, regardless of, I mean, you can do your numbers. If the book value, I think I have the book value. These are the book value figures as a Q1. You can say, look, what's the worst case scenario that happens? There is zero book value growth, which is almost impossible. But let's assume that zero book value growth for the rest of the year. Where would that put you? So those are my views for the banking stocks. I mean, yes, we are all holding companies, but the bulk of them are banks anyway. Now, for Aradel, I have a video on Aradel I did, and I know I keep saying please refer to the videos. Well, please do, because I have so many stocks on one page here in this video that I can't go into the details of each. You very likely would have to, go through the numbers, and I'd be in the comment section as well to answer questions about this. But Aradel, if you do a DDM valuation at 10% dividend growth, and you can Google DDM, means dividend discount model, you work out your DDM valuation, 10% dividend growth, and I think 10% return, then you have a value of about 1650. If you drop it down to maybe 5%, then you have a value of, I think, 600 or 700. So whichever way it is, anyway, I think it's an almost incontrovertible fact that Aradel should be trading at least 700 naira a share. Whichever way you slice and dice it. If you're going to go by the DDM route, then you could have maybe 600, 700-ish. If you're going to go by the fact that post the Renaissance transaction, it is a bigger firm, and the share of revenues they'll get and share of ultimately profits they'll get from that transaction make it a bigger firm, which should reflect in H1 numbers, then it should be trading much higher. So whichever way you look at it, this stock should be at the bare minimum at 700 naira a share. But anyways, these are my views. Do let me know your views. Thank you. Bigs up to everyone in the community. Anyone who has questions, please go through the videos. Read carefully all the terms and conditions I've put. Hold means not buy or sell. Accumulate means buy gradually. Please note, as always, this is not investment or trading advice. Do your own research. Banking stocks, do your own research and use a stage 1, 2, 3 provision. Clear all of those. Check your book value after all that and see what you get. Refer to my Zenith Bank video. Again, this is a rudimentary video. Standalone videos may have different valuations and offer better insights in some cases. Let me know what you think. Have a good day ahead.